Alright, so this is crazy. Apparently, the Chinese economy is on the brink of collapse in just a matter of days.
This is the story of a huge change in the Chinese economy.
A story about hubris, about excess, but above anything else is a story about debts.
I want to quickly say that I am not the first creator to make a video about this. There's also Business Basics, Cascades Academy, Graham Stephan, and a couple other creators, but this is pretty shocking and I wanted to share it with you because the Chinese economy is on fire right now. And that's all thanks to the Chinese real estate market, which has been accused of running a massive Ponzi scheme of over $9 trillion. And that makes crypto look small by comparison. So here's how the scam goes. A real estate developer comes along to take funding and pre-sell money to start building homes. But before completing their projects, they then use the collateral of what they've built so far to collect more funding and more pre-sale money to start building more of these unfinished homes. And this goes on and on and on. And believe it or not, this pre-sale strategy is how over 85% of China's homes are sold. And it can take months, if not years, for these real estate developers to finally start building. And that's why we see all these half-finished, empty buildings littered throughout parts of China, which of course, understandably upsets their investors. In fact, people in China are so fed up with their real estate situation that in just 1 month, they have boycotted over 300 of these unfinished projects spanning across 90 cities in China. In fact, there are people right now that are literally protesting in the streets, asking for the banks to give them their deposit money back and to stop paying mortgage payments on homes that haven't even been built yet. So far, demand for housing has dropped to 16.9%, which is the lowest level since 2016, and home sales have plummeted 25%. Meanwhile, the banks are responding to the Chinese people by sending in more police forces and even military tanks in some cases to, quote, stabilize the situation. The fallout from this disaster is going to have an effect on the rest of the world because China's economy is also the second biggest one right behind the US. So what happens in China will no doubt have an effect on the rest of the world, including the US stock market. And it's also why there's extremely high tensions between China and the US to audit the financial statements of some of these companies. Because of course, the US wants to know how bad things could potentially get. But believe it or not, mainland China and Hong Kong are the two only jurisdictions worldwide that don't allow for these inspections because of confidentiality concerns. That's why already 5 massive Chinese-owned companies have voluntarily taken themselves off of the US exchanges. And they're not the only ones. Right now, there's roughly 300 Chinese companies with a combined market cap of $2.4 trillion that are at risk of being delisted, including giants like Alibaba. So it looks like the US has already started to brace for impact, and now we just have to wait and see. So in today's crazy video, I want to help explain exactly what's going on and how this will affect us, so let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay because of China. So first, we'll talk about what's going on and how this will affect us. But first, I have to explain how we got here. Because the way we got here is through a company called Evergrande, which was one of China's biggest real estate developers that you might remember from last year, which defaulted on its payments. Now, Evergrande is considered to be the Chinese version of the Lehman Brothers, which is already a very bad thing because if you remember, the collapse of the Lehman Brothers here in the US was partially what triggered the 2008 global financial crisis. And this story kind of starts in the same place. Now, in order to understand how important real estate is to the world and to the Chinese people, I have to give you a little bit of context. In the US, for example, the rate of home ownership is about 65.8%, but in China, that rate of home ownership is closer to 90%. Now, that's partially because historically, it's been considered a very good and safe investment to buy real estate, but more importantly, of what it means culturally and socially to be able to say that you own a home. Now, that's partially true in the US as well, but not as true as it is in China. It is so important to say that you own a home in China that home prices to incomes don't even sound real. Here in the States, for example, the average home price to income ratio is about 4.7x, meaning if you make $50,000 per year, you would get approved on $235,000, maybe up to $250,000 at the high end, and that would be your max limit. But in China, that average is anywhere between 20 to 35x people's annual income, which is just insane. And by the way, those are 2015 pre-pandemic numbers before real estate exploded because people realized they could be stuck at home for a very long time, so they might as well spring for something a little bit extra. Today, those numbers in certain megacities like Shanghai and Beijing could reach closer to 50 times a person's annual income. Could you imagine making $50,000 a year and asking the bank to approve you for a $2.5 million loan? The US banking system would never approve someone for a loan like that. But you can see how quickly real estate prices can get way out of hand if those kind of purchases are allowed to be made, and you could probably see just how lucrative and profitable it is to become a real estate developer in China, which is also why real estate makes up 30% of China's entire GDP. So about a third of how China makes its money is by selling real estate. And that's how companies like Evergrande became as big as they got, with over 1,300 development projects spanning across 280 cities. This greed and this toxicity that is real estate has sort of permeated the entire Chinese economy, and this Evergrande collapse is the first domino to fall. But they are not the only company to stop their repayments. Let me show you how deep the rabbit hole goes, Neil. But first, a quick word from today's sponsor. Do you ever get deja vu? Because every time I open up my trading account, it's in the red day after day. And it's not just my portfolio. With insane market volatility and low investor confidence and the total obliteration of $13 trillion off the stock market, it feels like we've all been here before. And let me show you what I mean. Which graph do you think is from today, and which one do you think is from the 2008 financial crisis? Is it number 1 or number 2? I think what these graphs show is that every bull market is the same and every bear market is different. And this time around, some experts are saying it's going to be worse than 2008. First, inflation is at a multi-decade high everywhere you look, and not just in the US, but even in Japan, which is a country that's famous for its lack of inflation. Secondly, European markets are in complete chaos thanks to the ongoing conflict, which is destabilizing the energy sector. Take Germany, for example. In the early 2010s, Germany had a monstrous trade surplus, and now it's in deficit. So if people are too scared to invest in the markets because of worries of a recession, and if people are too scared to invest because they're afraid that 2008 will happen again thanks to a real estate collapse in China, then how is anyone supposed to survive? Some experts are saying the answer is alternative assets. And of these alternatives, real assets like art can give the biggest boost to a struggling portfolio. Just take a look at this data from 2008. The day after Lehman Brothers collapsed, Sotheby's sold $111 million in art. But it's not just 2008, because art has outpaced the S&P 500 by more than double over the last 25 years. And that's why my friends at Masterworks have more demand than they can keep up with. They're helping people keep their cash intact by offering fractional investments in the top 1% of the art world, delivering an insane 26.8% average net returns through COVID, through a bear market, and through red-hot inflation. Now legally, I do have to add that past performance is not a guarantee of future results, but it's no wonder that people have invested over $500 million with them. Like I said, demand is through the roof with recession fears looming. That, combined with the fact that they speak to every investor to make sure art is right for them, means that there's a wait list. But I'm super excited to hook you up with priority access to skip the line, and it's as easy as clicking the link in the description below this video. Thank you, Masterworks, for sponsoring this portion of the video. Now let's get back to it. All right, so far here's the damage. Roughly $90 billion worth of real estate developer value has been wiped off the map this year. And so this Evergrande collapse that happened last year wasn't the only one. There are 4 other major real estate developers that have been delisted from China's own major stock market index, including Sunac, Kaisa Group, China Aoyuan, and Shimao Group. All in all, over 60 real estate developers owe $13 billion in bond repayments due this year. And it's not looking too good because a lot of them have already filed for extensions, and some of them just outright can't pay. And the consumer confidence in China just hit a multi-decade new low, and home sales and home values are starting to plummet. There's no guarantee that the Chinese economy won't default very soon. And I have to say that the Ponzi scheme was almost perfect. They just missed one step. Step 1, build and pre-sell homes at overly inflated appraisal values. Step 2, use the profits you made from step 1 to half build even more projects. And then step 3, before you finish building any of them, ask for more pre-sell money, and then go wrong in step 4 because you didn't see a global pandemic coming, therefore you had to delay everything, therefore upsetting people because you couldn't finish their projects or you couldn't pay them back. And then step 5, default and collapse. It's estimated that China's property sales are going to decline something like 30%, which is way worse than 2008 when they dropped 20%. And normally this would be fine if they had just stuck to the basics of investing, which is to diversify their portfolio. But instead, roughly 70% of China's wealth is tied up in real estate. And that makes Warren Buffett very sad.
70% is not what I would consider diversified at all. Man, that's like investing basics 101, but So smashing the like button and subscribing, but what do I know?
But now that China finds itself here, where people are protesting in the streets and people have had enough and the Chinese economy is on the brink of collapse, the trillion-dollar question the world wants to know the answer to is, how bad will things get and how will this affect investors around the world? And the real answer to that question is, no one really knows, because a lot of the data is obscured and hidden from public, and a lot of that has to do with keeping up appearances, which is also why the Chinese government is doing what any government would do at this point, which is to approve a bailout. Just recently, China approved plans for a $44 billion bailout to help the distressed property developers finish their unfinished business, to restore consumer confidence and get this game of musical chairs going again, which is pretty unfortunate because by approving the bailout, it only encourages more reckless spending and more corporate greed, because who cares if the government bails you out anyway, and why follow the rules of what's called the 3 red line policy, which was meant to restrict how much leverage they could take on, if that's going to be ignored as well. So for those reasons, the collapse has already happened. It's already behind us. But what its effects will be on the rest of the world is not something the world knows about just yet. Maybe someone knows out there, but it's definitely not me. This Lehman-style collapse was supposed to happen in 2015, and again in 2017, and in 2019, and again in 2020, 2021, and of course 2022 this year, and it could happen next year in 2023 when most of their bond payments come due. For now, the rest of the world just has to wait and see. Be careful, stay safe out there, and just realize that some pretty interesting things are happening around the world and no one really exactly knows what's gonna happen. But in the meantime, I'm still doing the same thing. Still buying VTI, the broad market index fund that allows me to own the entire US stock market. Also VOO, which is the S&P 500. That works as well for me. And I try not to pick individual stocks because I don't think I'm a good stock picker. But if I do, and when I do, I try to aim for something that's undervalued and something that's a blue chip dividend stock because I love my passive income. So that's the strategy. Nothing has changed there. In the meantime, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab up to $250 worth of free Bitcoin right here. Please remember to take it offline, keep it on cold storage because it's not safe, but grab the money while it's still there. Grab the free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I'll see you back here on Monday, Friday, sometimes Wednesday. I'll see you soon. Bye-bye.